Good morning, YouTube. Good morning, fellow traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global market. Good morning, Achi, Markline, and the rest of the team. So, we will begin with our usual procedure. Good morning, Halima. But before we proceed, I would like to remind you that it's going to be a pre-recorded YouTube video to mean that you could find it later on our YouTube page on HFM Kenya. Kindly like, subscribe, and click on the notification button so that you're not left out in future content that we produce from time to time to keep bridging the educational gap in the financial market. Now, one day down, 460 more to go. That is a countdown of Donald Trump, the 47th president of the United States, which we are well familiar of his impact in the global scenes which affect the global market. Having said that, after his inauguration, this is on fundamental analysis, analyzing economic and geopolitical forces driving the market. We see a significant shift where we see him sign more than 200 executive orders, which cut across immigration, state functioning, international policy, and of course domestic affairs. We also see him revoke up to 78 presidential orders from the previous administration of Joe Biden. Our key interest and focus is to look at those which affect us, which affects the financial markets, so that we can adjust that to our trading system. And amongst that is that his speech, which he has been making in the previous day, shakes up the market. No immediate tariffs that he had promised, which has had the United States dollar have a slight weakening because of the shock which came up with this. Tariffs are essentially taxes from imports from other countries. We see him imposing tariffs on China, Mexico, and Canada. That's the northern and southern neighbor. We also see him invoke that conversation to the European counterparts. Now, the market overview of this is the US dollar took a hit on Monday, dropping more than 1% after the Donald Trump speech on his first day in office. On commodities, gold gained momentum, testing key resistance level. We're going to be looking at that. And major market shift as tariffs are put on a pause. Remember, we're on the 22nd day of January. So the first tariff we're going to see it being imposed is on the 1st of February. So this tariff is going to affect imports from Mexico and Canada. And this declaration and the decree of these presidential ordinances made gold to collapse to a certain extent. I'm sure most of us could observe it from our trading platforms. But how long will this take? Let's have a view on the economic analysis of this. The economic impact of the Donald Trump's speeches. No mentions of tariffs led to the US dollar decline. Expect the USD to remain under pressure in the short term. So in the meanwhile, gold may continue to rally, nearing resistance points. So we see the domestic and foreign policy of Donald Trump not only affecting currencies, but also having an influence on commodities. All right. We have come across the fresh drill, baby drill, which he intends to start drilling oil and gas, natural gases in the United States. This is going to cause shift in market dynamics in commodities with focus on oil or gas. We also see Donald Trump withdrawing from international treaties of environmental conservation, and as a retaliation of this, saying that he's interested to get into mining the gold of the desert, of the oil, if you may like. So the market sentiments on this, the bearish on the US dollar after Donald Trump's speech, as tariffs are not on the table yet. We know they are coming, but they're not on the table yet, leaving the market uncertain. This is why the gold has seemingly been moving in an upward trajectory, which gives us the bullish sentiment. A mixed mood across all markets. If we look at stocks, individual stocks and indices, we're going to see a mixed mood to mean not clear market direction as things settle down to proceed from there. If you're eyeing gold or other commodity, watch for price action near the areas of interest. And a breakout from the areas of interest could get us into the volatile space to react from this movement. On top of that, the president of the United States has also threatened direct 10% tariffs on Chinese starting next month again, that is on February. This adds more pressure to the already tensed trade wars. Now, this goes all to commodity traders. We know that any tension or uncertainty in the financial markets would cause the demand of commodities and would put a focus on gold and silver to anticipate possible buys. Okay, the Trump's tariff threat shakes the global markets. This, by all standards, presumably, at a 10% tariff on the Chinese good could add into the current levies, which are already ongoing, and this also puts the European Union, Canada, and Mexico in the crosshairs. All right. Now, having said that, that is on geopolitical happenings. These are just presidential ordinances that we know will affect the movement of the global markets, and that is our core business. Now, moving on to economic data. Before us, okay. I'm sorry, Abdi. Before I proceed, I see on the comment section, Achi is asking, I need to watch this recording again. You could find it on our YouTube channel at HFM Kenya. Kindly like, subscribe, click on the notification button, and also share. And good morning, Edith and Francis. So as we proceed to economic data, we have high impact news coming from Britain, where we see the unemployment rate printing higher than expected, which means that part of the world, the economy is not doing really well. When less people are getting employed, we know that is a weaker economy because it shows stunted growth. In Canada, we have the Bank of Canada Consumer Price Index, which we know is a key inflation data, printing at 1.8, which is higher than the previous. So we see inflation concerns in Canada, which is the northern United States neighbor. In New Zealand, we also see the consumer price index printing higher than expected. So we see inflation concerns in various parts of the world. Today, we would have the Bank of Japan interest rate decision yet to be reviewed as we move into the day that we know it's going to affect the JPY pairs. Having seen those, the important ones, and then the services PMI is also coming up today from the Euro zone. So we see quite a number of inflation indicators coming in to tell us the general cost of living in different parts of the world. We're able to assess this from an individual level before we culminate to the global standards to be able to tell market direction in that regard. With that said, proceed to share the charts. Very nice. Okay, I think we could work with that. Just a minute. Okay, so beginning from the daily time frame, we look at our usual suspects. Beginning with Euro USD, from the daily time frame, we see a purge of this Maraboso candle to try and change the overall trend from a downtrend to an uptrend. Although we have not broken the area of interest that we set out last week, we want to see price attempting to break above it to indicate market direction. But hold on a minute. If you go to a lower time frame, we see that the overall trend, which was a downtrend, which is seen from the daily time frame, on the 4-hour time frame, we see that price is printing to the upside. So we see a certain change of character, broke this area of interest like we had indicated earlier in the week. Now price is attempting to approach this. Why do we see a weakening dollar? We see a slightly weakening dollar for USD quote currencies because of the underlying factor. Remember, before the swearing in of Donald Trump, the data which was coming from the United States was coming lower than expected. That is the CPI, that is also the PPI, right? These had showing cooling concerns in the United States, or cooling inflation in the United States, causing the price to print in this direction. Now with Donald Trump in office and the implementation of his policies, his administrative policies, we might see a change of trend from this short-term reversal to proceed with the long-term trend, because we know amongst all the policies that he's putting forth, our focus would be how is he impacting positively the local politics of the United States. We know that is going to increase taxes and more regulation for foreign companies, and on the inverse, reduce taxes and reduce regulation for US based companies. This is going to strengthen the US dollar. A scenario that we will likely also see in GBP USD, we see it testing this area of interest. I would push it. Remember, in technical analysis, we define technical analysis as the study of past price charts to be able to tell possible market future direction, so that we're able to make a back out of that. Also, a scenario we're going to see in AUD USD, price giving us a fake out here and attempting to print price on the upside. Just trying to extend it. It actually even adjusted. Also a scenario that we'll see in AUD USD as it is right now. Now for US dollar based currencies, of course, going to be printing in the inverse direction. It was overall an uptrend. Now we see a slight change of trend in price action, where now we see higher lows and lower lows printing to the downside because of the weakening dollar. Now that Trump is in office, this might change. Why am I using the word uncertain, word might selectively? It's because the implementation of these policies is what is going to give us some level of certainty. And when it gives us some level of certainty, then telling future market direction is going to be much more clear. And remember, on the between the 25th and 29th, the Central Bank of the United States is meeting. We know that they monitor inflation and they monitor the employment or labor space, and this could also give us either market direction to keep being on a bullish trend or to change the character depending on their interest rate adjustments. Moving to gold. Now, in understanding commodities, we have mentioned this time without numbers that when it comes to analyzing gold in fundamental analysis, it is important to note that as much as gold pays attention to economic data, it would incline more or become subservient to a certain degree or obey much to geopolitical events. And there's an uncertainty of the entry of Donald Trump in office before the implementation of his policies, both domestic and international, could be said to be causing fear in the financial markets, and this would cause the demand of gold to rise. So that's why we have been experiencing a return of the bull trend from this retracement. Now we want to see the highs to be taken out to confirm this, as long as the uncertainty continues. And in every day in the morning on the daily morning market call, we're in the business of looking for the certainty of these geopolitical events and also analyzing economic data to be able to tell market direction. But as of now, gold is seemingly want to be trading in an upward trajectory, or bullish for that matter. Now, with that said, it is important to note that this, by any chance, as a disclaimer, is not financial advice. It's purely meant for education, analysis purposes. Kindly do your due diligence, and most importantly, remember risk management. Apply proper risk management to be able to stay longer in the financial markets to experience much more possible future profit. If curiosity has been raised and you would wish to participate in the financial market, kindly contact the person or persons who led you to this chat room of the daily morning market call, or also visit hfm.com, and they will be able to guide you on the process of beginning your financial journey in this market. Until tomorrow, see you the same place, the same time to do things the same way that has proven consistently profitable. Until then, God bless and God take care.